Hey everybody, in the last video, I talked about the similarities of today's market versus the pattern that the market was making before the infamous Black Monday of 1987. And I mentioned that we got to be careful with the pattern that the market's making. It could be a very bearish outcome. It could have a very bearish outcome, right? So let's just go back to 1987 here. You can see that at the top here, we're making a lower low, and we're making another lower low. Then we came up to make a higher high to this low. Then we came down and we completely fell apart. If I go to the 2-hour time frame, you can see that we're making a similar pattern. We're making a similar pattern, right? Up until this point, up until March 2nd, which is the actually later of March 2nd, the market actually stays or stabilized in afternoon of March 2nd. And then on Monday, March 5th, it has begun to going up. And you can see that this part actually diverges from this, which actually fell apart. So my original thinking was that this area could be the first consolidation area. You can see that before the crash, we had if we go to the daily time frame here of 2018, you can see that back in 2015, we have a longer term consolidation, just like 1987. Very similar pattern here. We have this breakdown, and we have this breakdown. You see that? Very similar pattern here. So the market is acting, it's kind of repeating part of history, right? You can see this consolidation area back in 1986. And we have something kind of similar. Look at that. These patterns. And the market does, what's interesting here is that when I was thinking maybe we're on the later stage of this move, simply because our price range is actually quite high from the bottom here, right? This is an increase of 65%. And you can see that back in 1987, this is an increase of 58%. So roughly the same percentage gain from the bottom. However, back in 1987, was achieved within a couple months, and this was achieved within 2 years. So we can give the price, so the price is able to handle a much this increase, in a much longer period of time. So it's possible that this price level is not that extreme compared to 1987, because 1987 the market moves a lot faster. And so it's possible, right? If you shrink it down into the same scale at 1987, we could be in the first consolidation area here, just before a further rise to an all-time high. And this area, this move, if it does happen, we better capture it, because this is a very low volatility move, right? Whether you are longing the index, whether you are longing the leverage ETF, or you are shorting the volatility, this is amazing. This is amazing opportunity, because the volatility is low, and also keep making all-time high, and you would have very little volatility in your portfolio, which allows you to hold right through the market, and you can keep lifting your stop losses up, right, without being stopped out of the market. That's a great thing about it. You want a low volatility market, because we don't want these kind of high volatility markets. When we participate in these high volatility markets, this range right here is very difficult to maintain our positions, right? We have to be maintaining our positions almost daily, which I don't really do that much day trade. I try to make that money versus making these kind of daily vibration, because they're very difficult to trade, and you have to be glued to your computer all the time. Although I myself, I'm able to do algorithmic trading, but I much prefer just make the easy money, like these kind of trend, right? I want to make from here to here, and I get stopped out here. I want to make from here to here. Actually, I did make from here to here-ish. I actually did not participate in the last stage of the recent bull run, just because I was kind of cautious here. I sold everything. I sold it too early. I should have waited for being stopped out. Anyway, now the behavior is slightly different, right? You can see that the behavior is different from here. So it might be having behavior here. How do I look at this? Pretty simple. So what I'm expecting is that we're inside it's pretty obvious that we're inside a triangle range, right? So let me just draw a triangle here. Yeah, maybe I'll just use this. We're obviously in a triangle range. And let me just draw this properly. And let me see if I can list this up. So we're tightening within this range, right? And this is actually pretty similar. I mean, these triangle range, you can check out is usually how consolidation works in these kind of vertical markets. You can look at history. We have many scenarios, instances. We have these kind of patterns, these triangle patterns. Eventually, either the price break out to the upside or price break down to the downside. I think my bet is really the price is going to break out to the upside. Our market's going to make all-time highs just because Nasdaq and all the other indices actually going above, actually already making all-time highs. So they're actually a kind of indicator to the Dow Jones, right? To the S&P and Dow Jones. And similarly here, we can also draw a triangle here. You can see that the market eventually is going up. And the breakout of that triangle, right? So I think next week I would like to see, these things just hovering around this area. Then eventually at the end of the week, we maybe on next Monday, we just break out. So I'm just gonna put enter some long positions here and put my stop maybe a little bit below this bar. Or maybe you want to be more adventurous, you can put below this bar, right? That's a pretty huge stop. Depends on how the market's going to go. I wish the market does pull back. If it doesn't, it's possible that tomorrow the market could just gap up, right, and leave without us. If that does happen, that's too bad, right? I have to wait for another pullback. Maybe it gaps up, goes really high, and have another pullback down to maybe fill the gap a little bit, then come back up, and now enter here. Either way, I'm not entering when the price is vertical. Right? I can't enter when the price is vertical without a proper stop. I just can't. And so that's the game plan, right? When it consolidates, you enter here. If it gaps up, you want to wait till it calms down and enter maybe here. Then we ride the rest of the wave going up to all-time high. I think the next wave, I actually have another chart that takes this range and just project onto this. And the next wave we might reach another kind of a top, interim top, maybe in August and September actually, and we'll see if the market does keep going up, or maybe we have a more bearish scenario in August, September. So the development, the price action from last week, since last Monday, has completely changed my opinion of where the market's going to go. And hopefully we can still catch this wave from the triangle to the next, all-time high. All right, thanks everybody. Happy trading.